Hello and welcome to Bullish. I'm Alex Wilhelm. Now today we're talking about public markets, private companies, and whether we're due for a correction. So over the past few weeks, global markets have hit a real rough patch. From China to the UK to here at home, assets are having a very hard time. And this impacts all sorts of industry like energy, media, and of course, technology. A wide range of tech firms have seen their value fall sharply from 52-week highs. And recently, public companies like Mobile Iron, Lending Club, and Castlight Health that are trading down from highs are in some cases below their IPO price. One example, Box went public at $14 a share, traded as high as $24 a share, and is now back to $13. For SaaS companies on the sidelines hoping to file, Box's story must be troubling. Now, it's worth noting the difference in tone right now between the public and private markets. So, while public companies are dealing with falling share prices, many private companies are lapping up valuations that to many are cut off from reality. So here's the question. Will the decline in tech stocks bring the value of your favorite startup back to earth? To tell us about that and more, we have Canaan Partners' Maha Ibrahim.
Canaan Partners is a venture capital firm managing billions of dollars in investment. As a partner at Canaan, Maha Ibrahim focuses on early-stage companies. Over the past 15 years, Maha has invested in a wide range of startups, from cloud to gaming. She's known for her versatility and ability to provide value to both the consumer and enterprise spaces.
Please welcome to the program Maha Ibrahim. Maha, welcome back.
Good to see you.
Good to have you here.
Thank you.
Now, I'm very curious. Given the global turmoil, turbulence, disaster, whatever you want to call it, are you changing your current investment patterns, pulling back, going faster? How does that impact you?
What is affecting our investment pace right now is frankly the frothiness in the markets. The valuation increases that we've seen on the private side have carried from late stage all the way down to early stage.
Okay.
And we're seeing valuations probably triple from what they were 5 years ago at the early stage. It's Series A.
So essentially, in these series, C, D, and E rounds, they got so out of control that that frothiness, that enthusiasm has gone down the entire chain to your realm of seed and A.
That's right.
How long did that take to kind of go backwards entirely? Because I know that late's been crazy for a while, but early's been less insane, I feel, over the last 3 or 5 years.
Yes, and it will change because of the macro environment, because of the volatility in the public markets.
Sure.
I think that there will be some sort of correction over the next 1 to 3 quarters. Okay. How steep that correction is, how long that correction is, it really depends.
Do you mean correction on the private or public side?
Both.
Okay.
Both.
So what goes first?
The public side goes first,
okay.
and we're seeing it right now. I mean, the stock market has been extraordinarily volatile over the past week. The counterpoint to that, however, is that with volatility in China, in Russia, in Europe.
Especially the UK, for example.
Exactly.
Yeah.
There's so much cash in the system, it's going to the US. It's going to U.S. public markets.
The global instability, which scares us here,
yes.
is sending more cash our way, which will then inflate our markets moving forward.
I believe that's what will happen, and it will have almost a perverse inflationary effect on the stock markets, despite the pressure of the correction down, and it will increase or stabilize the amount of cash going into the venture industry, which means that you might not see the correction of valuations in the public and the private sector go down as quickly as they may, or as probably they should.
And they say there's no comedy in finance. That's the definition of irony.
It is irony.
Okay,
yes.
But you track the NASDAQ then. I assume it's in your peripheral vision.
It always is.
Okay, so when it's below 5,000 pretty quickly, you go, oh my, that means something's going to happen.
Yes.
Do you think we're going to see an increase at all in the IPO cadence this year?
It looks like the IPO cadence on the tech side, not healthcare,
tech.
on the tech side is slowing down. It feels like it, again, because of volatility. Investors want to see new issuances when volatility is less.
Low.
Yes.
Right, so the higher the VIX, the less IPOs.
That's right.
But we've seen Mobile Iron and Box all go public, all do very well initially. Castlight Health is an example of this, and then see their shares fall precipitously in the ensuing time period. Is that the decline that's leading to the slowdown in the IPO market, or is it a lack of companies that are willing to go public?
It is, I believe, the latter.
Okay.
There is so much cash in the system that companies can wait until they are more stable from a revenue growth standpoint and to go public.
Yes.
They have the choice to opt out of going public. And some of them don't. Some of them, and you've seen some S1s being filed over the last couple of weeks. Some of these companies are burning $10, $15, $20 million a month.
Pure Storage, for example.
They need to go public.
Right. But why is there no cash available for them? I mean, why does Dropbox have unlimited money and these other companies that are going public or planning to have to go to the public markets for it?
This goes back to the inflation that we've seen in the late stage investing market, right? Some of these companies, and I'm not going to pick them out, right? But some of them
You
have.
can if you want. There's no one's going to see this.
No one.
You're totally,
no one.
You're totally safe.
Some of
She
them
means
have
Dropbox,
had.
someone.
No, I do not mean Dropbox.
Okay.
Because I don't know their economics.
Yes.
But some of them that have filed S1s, you see them, and they have seen such a run up of their price per share over the last couple of years that at some point in time, private market investors just don't want to continue to fund that.
When the valuation does this and growth does that, there's a gap that forms.
Absolutely.
Okay. Now, how many investments do you make a year? 2 or 3, probably?
As an individual, I
Yes.
do roughly 2 a year.
Roughly 2 a year. So will that, next year still 2, next year 1, next year 0? If you had to guess right now.
I've thought a lot about this because we have slowed our investment pace considerably over the last quarter or so. Not because we haven't been finding things, but because the price and the valuation of these companies is just in the nosebleed section.
Okay. So next year for you.
Ideally, we buy into slow markets. When the market corrects, that's when venture folks want to be putting money to work.
That's true with all markets. I mean, everyone wants to buy low and
Exactly.
sell high.
It is buy low, sell high. But psychologically, we never do that. I am committing to myself personally that as the market declines, I will, when I see good opportunities, put more capital to work than I did, let's say, in 2008, 2009, or than I did, let's say, in 2001, 2002.
Okay, well, we'll have you back in about 2 quarters then to your guess and see if you were right or if you were wrong.
That's right.
All right, thank you for coming in.
Thank you. Pleasure.
Bullish airs every Wednesday at 10 a.m. Eastern, 7 a.m. Pacific, and you can find it here on TechCrunch.com.